Okay, it's still giving me the invalid parameters message, but I think it's working, however. Yeah, all right, so we'll just go with this. Hang on, I gotta make a few adjustments. This might be quirky. Oh, I know what I can do. I can hide that. To move this over. All right. Okay. Thank you. I guess YouTube changed everything since yesterday. So a lot of things are just not working. Well, anyways, we'll go with it. Nice to meet you, everybody. Hello, my name is Wayne McDonald. I'm the Chief FX Market Strategist for TradersWay.com. Thank you very much for being a client. If you're new, please visit TradersWay.com, open up a demo account. You can have a fixed spread account. You can have a variable spread account. You can have an ECN account. If you check us out and dig deep, you'll find that we have fast execution speed, competitive spreads, amazing swaps, world-class customer service, and of course, these webinars every single day designed to help you become a successful foreign exchange trader if you decide to put in the blood, sweat, and tears for years. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never, ever, ever risk money you cannot afford to lose. Okay, so we're here, but things are just not working. But could be worse, I suppose. I don't know if it could be. But all right, so we'll do our webinar. Where is my drawing tool? I got that. Okay, so let's go back 24 hours ago. We had a trade plan for oil. We marked it over here. La 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 la. We discussed trading, doing day trades. Okay, and look what's happened since. Right off the trade zone, moving on up. I know it's only $1. But that's like 100 pips, right? That's $1,000 on one contract. Hey, could be worse. I used to have to take my clothes off for $1,000, but now I can just trade oil. Hey, whatever. Cool, man. Cool beans. So, nice little roll reversal. Took 3 days to come down off the news high. Cool. And that's it, right? Nothing really to it. I think that's all I want to say about that. Oops. I like the way you trade. Hey, did you guys like the interest rate decision webinar I did yesterday? I think we had a lot of fun. If you were there, thank you for being there. I did not send out any emails. I simply hit stream, and anyone that is a subscriber to the Forex.Today YouTube channel was invited. Yeah, it was a good day. So if you've not yet subscribed, please do. Consider it as a benefit of being a member of our community. Cool. Okay. We got to move. Hey, that's some good clapping, Peter. Cool. So, what do we want to focus on here? I think I want to focus on weekly. So let's actually do that, not monthly. Let's just do weekly. Boom. All right. So obviously, when you look at this chart, it just speaks for itself. Absolutely, totally clear what to do. I probably don't even need to explain it. But if anyone has a question, bring it up now. Don't be ashamed. I know this is elementary. It's like asking what comes after D, and you're like, E. And then like, what's after E? And you're like, F and G and H. You're like, really? Any questions about this? Pretty simple, I think, huh? No questions? How come nobody's like, what the hell is that? Oh, maybe you prefer this view. Yeah. Hey, I'm waiting, man. I'm waiting for someone to like, I don't understand any of that. Okay, so anyways. So what's going on with Euro? Well, if you're a bull, let's go through it. This is your first buy, and this is your second buy. And you are on your way up. Moving on up to the east side. Okay. Finally got a piece of the pie. Okay. That's it. It really is that simple. If you're a bear, you sold here and you haven't really had a second chance. So there's 2 bullish entries and 1 bearish entry. Okay. And that's it. Can we check the beast? No, comms. Absolutely not. Okay, comms. You talked me into it. That was, yeah. Okay. But you see that? It's just stepping up. If you're doing your job, there's no confusion. Beast. Do I have beast here? Oh, I have beast. Okay. What do we know about beast? Why have I not talked about it for about a week? Okay, and this is where you answer. Why have I not talked about this for a week? Now, first of all, can you see what I drew last month? How many people remember me drawing? Let's do this in pink. Let's make this one fat. How many people remember me drawing this? 5 weeks ago. Huh? How many people remember me drawing that 5 weeks ago? 5 weeks ago. Remember that idiot that came in and like, Wayne, you're all hindsight. All you do is talk about yesterday. I'm like, are you deaf or something? I never talk about yesterday. I go back and redo our lessons so you walk away with knowledge. But OMG, right? So the predicted top, we're in that zone. Now notice, I had limited information back then, so I had to guess somewhere around this, I'm trying to get this out of the way, this, because this is as high as the chart went at that time. And there was, I was stretching, you know. It'd be like me going like this now, right? Way out in advance, okay? And then several weeks went by to catch up to it. So anyways, this is where the target was. And yeah, I think we're on our way to 135. So we're up in there, and there's nothing really for me to do now. That's why. There's no reason. Why would you trade this now? Yeah, it might continue going up, but I don't trade might. And sometimes it does. That's cool. Doesn't mean I'm in a trade on it or that I want to get into a trade. Like, why would you want to get in a trade now? This is where I think people really need to work. And I mean, psychologically, you need to have time on your own with yourself saying, like, why is it that you don't trade here, but you finally start to get on board here? And what happens is over and over and over again, you're doing the opposite. Okay, you don't want to buy here, but you'll buy here. Okay, and of course, if you buy here, someone else is probably going to start taking it down. So it's just like, have a retreat with yourself, man. Seriously. So what do we do here? Nothing. This has been done all week. This is why I haven't covered it this week. Why would I talk about it? Okay. Now in the swing trading group today, we might talk about it, but for completely different reasons. Okay. So imagine, like, we talked about things. I want to point this out too, because this is also, and I don't know if you're taking notes and stuff, but this had been coming down for weeks and weeks and weeks. Okay. That was the assumption too, by the way. Then when we got down into August, I said, okay, well, we know the third week of August, this might go up. But there's nothing on this chart to indicate that, right? Remember that? It fell all of April, all of May, all of June, all of July. And then August, I'm like, I have to have a hypothesis. Here's my hypothesis. Somewhere in the next 4 weeks, pound yen's going to go up. But I can't put this together until I have evidence that supports my hypotheses. For this to work, we have to reverse the entire market. I think we'll need like a reversal pattern. Like, I don't know, a double bottom. A double bottom would be very helpful. And I would like to get long on the September M2 after the double bottom is formed. So I got to get ready. I don't know if it's August 1st. I doubt it. I think it's going to be around the third week of August, which means maybe around the second week of August, I should start sharpening my saw, getting ready to go to work, right? Take the vacation hat off, put the work hat on, right? Turn on the lamp. I don't know how I turned from a lumberjack to a miner, but whatever. And like get ready to do my damn job. How many people remember like that kind of specific setup? Weeks of it coming down, weeks of it sort of stabilizing, looking for reversal patterns, changing the psychology, getting ready to do the job, and then actually doing the job. How many people remember all those pieces over weeks and weeks and weeks and weeks and weeks, and almost on a daily basis? I need you to actually type it out. It's important for neuro-linguistic programming. If you're gonna, you have to like manifest your thoughts. You can't just say, yeah, I remember that, because then it doesn't make a change. Okay? Like 1,000% you were ready for this. Okay? So the next lesson is buying here would be a financial suicide. That the market did reverse. It did give us a double bottom. We did get our pivot point. Perfect. 3 points, nothing but net. Okay? Now you got to go play defense. That's how the game works, man. Yeah. So for everyone else, that means there's about 110 people that didn't or didn't respond or doesn't, I don't understand the other 110 people. So for the other 110, I don't know what. I don't know what, right? Joel's 400 pips in profit. Good job, Joel. Joel's just doing his job. Oh, 6 people just logged out. I just pissed off 6 people. All right. What am I supposed to do? Oh, thank you, Ernest. Isn't that amazing? I just pissed off 6. So now YouTube dropped me again. Oh my gosh. I guess I'm back. That would have been great to just drop the mic. Like, what more can I do, man? What more can I do? So anyways, I think I'm back. So anyways, I'll just keep going. What more can I do? Drop the mic, walk off stage. Yeah. Okay. Yeah. All right. Yeah. So so we did oil. I mean, right off the bat, oil straight up. Cool. Yeah. You there, Wayne? Yes, I am here. Yes, I am here. Offline, really? Welcome back. You just find it hard to be here when you're on. Yeah. Offline, no video. Like, dude, I haven't touched jack. We can't hear you. Nothing here. Audio, video, solid. Live stream offline. Huh? Well, I'm online. All right. Well, I'm going to end it and turn it back on. You are not alone. I am here with you. Though you're far away, I am here to stay unless YouTube drops the stream 15 times today. Yeah. Strangest day ever. I wonder if it's updated this. Hang on. No, invalid parameters. So I'm getting like really strange errors today that I've never even had before. So whatever. Yeah. I was just saying, hey, what can I do? What more can I possibly do? And I like drop the mic, walk off stage, stream offline. And I'm like, oh, I should have did that. So anyways. Boom, shalaka-laka. All right. Okay, gold. We're back to gold now. No, yellow. Don't want yellow. Yeah, I did that after I got my errors. So I'm not blaming that at the moment. I'll blame that tomorrow. Okay, so what do you want to do? Well, this is important information because we are not above the 21. Okay. I guess I could draw this one differently. I used to call this frequency, but if you Google frequency technical analysis, you'll get completely different information because, again, I'm self-taught. So I used to call this frequency, okay? 5 is the support, 21 is the support, 21 is the support, right? And now not 21, not the support, probably more like 55 going to be the support. So 5 was the support, then the 21, and now the 55. So based on frequency, and I use an oscillator, right, for this. So like oscillator went from this, from a 5 to a 21 to a 55, okay? See that? That's how I looked at it. The frequency is slowing down, and that's when the market is slowing down, it becomes vulnerable to a top, okay? Now, if you're already a bear, then perfect. That's what you're looking for. It shouldn't make you a bear. It's just technical analysis. So remember, technical analysis just tells you if the market conditions are favorable to enter trades. What are you, a buyer or a seller? Well, that has to do with your fundamental bias, not this technical analysis nonsense, right? I say that facetiously. I love technical analysis. But a lot of you guys say, oh, well, it's below this, so now I have to be that. That's dangerous. Ali says, Aussie yen dropping hard. Wish I would have had sold it. Well, we had it coming down so that I can buy it. Okay? So we had that coming down, and I wanted it to fall so I can buy more of it. Okay? And I believe I also discussed that I could have taken profit and then like on everything and come back and buy it again. But that's not really how I want to play that either. Okay. So you have to make a decision. So that was a big thing last week. Maybe it was the swing trading group. We talked about it like, you know, these are very valid places and I don't know any more than you. You just have to make a decision. Right? What was your intent when you placed the trade? That would be your guidance. Did you guys notice the webcam's on a different side now? You hit your stop? No, I'm nowhere near my stop. I'm 1,000 miles from my stop. All right. After all of that, man, now I'm tired. What a crazy day, man. Trade some nat gas. Okay. You guys, if you've read my book, 2155 cross up, you're a bull. Therefore, right, you buy well, usually it's the next 5A cross. Then you exit the 5A cross, then you buy the next 5A cross, then you exit the 5A cross, then you buy the 5A cross, then you exit the 5A cross, then you buy the 5A cross, then you exit the 5A cross. Cool, right? This is nat gas. Okay? So that's the old school standard operating procedure, documented in the Library of Congress. Okay. Now I see the 55s in control. Now again, I'm going to be worried about continuation and maybe potential reversal. Michael, it was just the strategy outlined in the book. And the book was saying that, how do you say it? It was more focused on day trading. And it was focused on trading in the direction of the market. So you'd have to decide right away what's the direction of the market. So I proposed in the book a 21.55 cross. And then the 5/8 represents price action. So when price action is going up, you're a buyer in a buying market. When it comes down, you exit for profit. And then when it goes up again, you're a buyer in a buying market. And then when it hesitates, you exit. And then when it goes again, you buy again. And you can think of these as day trades or even intraday trades, right? Like this might be London, this is New York, this is Asia, this is London, this is New York, this is, right? So on and so forth. Okay. But I needed to give, you have to remember, I wrote the book so long ago, what is it, 13 years ago, that even technical analysis was a new idea. Okay. And that I had to have a very simple process for new people to follow and understand. So I had to say, this is technically how you decide whether to be a bull or a bear. And then that's just the market, because it's not really you deciding if you're a bull or a bear. It's you determining with technical analysis if the market is bullish or bearish. So if the market is technically bullish, one of the things I suggest in the book is that you might be better off buying in a bullish market. But to know that, you need to know when to buy. So how do you know? Well, you want to buy when the market has a hesitation or a pullback, and then has started back up in the direction of the market. Okay? That's all I was suggesting. So when price turns bullish again in a bullish market, you would buy it. And then when that stops, you would take profit. Okay? Strategic and tactical Forex trading. So the strategy is, okay, you're a bull. Ta-da! Okay? Buy, exit. Buy, exit. Buy, exit. Buy, exit. Okay? See what I'm talking about? Back in the days of GFT and Dealbook. Yeah, a long time ago. Huh? But that's it. So that's, I assume you guys have mastered that inside and out. Okay? The problem with that is, if there is a problem, I don't think there's a problem, but let's say a vulnerability of that strategy is that these moving averages lag. Okay. Yeah, I'm not actually looking at the monthly pivots. So like, for example, this is the standard setup. Okay. Okay. This setup helped me quit my job as a venture capitalist. Okay. So this measures the market. This measures the market. This measures price. Ah, come on. It's supposed to be orange. Oh, where'd it go? Wow, bounced back. How weird. Guess I'll just do it all again. Okay, this measures market. This measures market. This measures price. This measures price. Okay, that's all I needed. And then maybe so I mastered all of this. And one thing that you don't see here is I probably rejected 100 things. So if you say, well, Wayne, that's only a couple of things. You got like some moving average crossovers and a couple of oscillators. What's the big deal? Well, there's at least 100 things I confirmed are stupid or pointless or worthless or redundant. And very often, if I looked at what you were trading before, I could probably find all kinds of redundancies. And then I'll also find that they contradict each other. And that comes from you not understanding what the indicator is actually designed to do. If you don't understand the math, then you could contradict yourself pretty quickly. And you might find some of the time your oscillators and your, for example, whatever you use, your CCI and your something else, they're telling you up, and then sometimes they tell you up and down, and then you don't know if this is consistent or this is consistent. You don't know, and all of a sudden you really don't know what to believe, what not to believe, when to trade it, when not to trade it. And very often you can't, because it's mathematically impossible. They contradict each other. And so there's no positive correlation, there's no negative correlation. You're at zero correlation. Okay. And I discovered these things working. And if you are a math genius, I'm not a math genius, but if you spent some time with this and you're good with numbers, you'll start to go, oh. There's a mathematical harmony to my trade setup here. So if you're a numbers guy and you start looking at what I'm doing, and then you start changing the time frames, how does it work on a 15-minute chart? How does it work on an hourly chart? How does it work on a 4-hour chart? And then you'll go, oh, wow. Holy smokes. Now, wee, yeah, seriously, and you'll just have this major epiphany. And you'll say, well, that's really actually quite smart. I'm not saying I'm smart. I'm saying I took years and experimented with not just hundreds, but maybe thousands of things. And it looks really simple, but it ain't. Okay? But what it comes down to is the market bullish or bearish? And should I be buying now or not buying now? Okay. MACD is best for a reversal. Well, first of all, don't say things like that. It's not helpful to you or others. Okay, yes, you can use divergence, okay, and stuff like that. But you should just understand the math. Don't say like it's best for this and best for that. It's just math. It's just numbers. It's just an algorithm. Okay? There's nothing to it. Okay? It's just math. So don't get yourself caught up like, oh, I should do this and should do that. No, you should just understand it. So yes, it is helpful in reversals. Is it best for reversals? No. Is it not best? I mean, no, you just can use it. I'm just saying don't limit yourself, and also don't pigeonhole yourself, okay? Okay. So, for example, let's make this simple. What does that mean? And while you're thinking about it, what does this mean? I'll give you an example, a hint. They mean the opposite. So if you don't even know that, you're like, oh my God, what? Don't first look, no. So right off the bat, first leg, you don't know, you don't understand the math. Bullish? No, not bullish. Uptrend? No. Above and below the waterline is key. Yes, Jimbo. So that's why they mean the opposite. Okay. What it means, we'll do the pink line now. The pink line says that there are two moving averages that I'm measuring. In this case, you'll notice I'm measuring the 21, right, and the 55 over the last 8 periods. So what this is telling us, well, let's do this in a different color. I should have done that. Okay. What the pink one is telling us is that in this period here, the distance between the 21 and 55 is diminishing. The two moving averages are converging. Most people don't even get this part. Moving average convergence divergence indicator. So you're like, oh, it means it's up. Oh, it means I should be a bull. Oh, it means it's reversing. Wrong, wrong, wrong. Wrong. All it means is two moving averages are either converging or diverging. That's it. I use 2155. I customize it. Why? Because I care whether these two moving averages are converging or diverging. Whatever your standard default settings are probably stupid. So I very quickly changed this because I'm measuring the market now. So I want to know, is the market bullish or bearish, or is it speeding up or slowing down? So one way of looking at this is, let's do another color. When you're above this water line, oops, I just changed color, I got to clear that. Okay, let's do black then. When you're above or below, okay, there's a water line here. I call it water line. Okay. When you are above this, the market is bullish. Okay, the market, not you, just the market conditions. Down here, the market is bearish. That's one thing. The second thing, I'm running out of all these colors here. If you're in a bear market but it's rising, the bearish market is slowing down. If you're below the waterline and you're falling, the bearish market is speeding up. If you're above the waterline and it's rising, the bullish market is speeding up. If you're above the waterline and this is falling, the market is slowing down, but it's still bullish. So most people that even teach you how to trade, how to profit with MACD, they can't even do the math. They don't even know what it's doing. They're just selling you crap. Okay? You need to understand what this is. So down here, it's bullish and speeding up. Here it's bullish and slowing down. Here it's bullish and speeding up. Here it's bullish and slowing down. And therefore, you can adjust your expectations or your trade plans accordingly. Okay? Remember, it's not telling you anything else. It's not telling you to be a bull. It's not telling you to be a bear. It's not telling you it's going to reverse. It's not telling all this stuff. Okay? Divergence tells you not if the market's bull or a bear, but if bears are leaving a bearish market or if bulls are leaving a bullish market. Do you understand that? Okay? So, you should very easily, if I asked you to, and I've done this, I've tested people that I've mentored. I've given them a chart like this. Actually, let me just delete this, okay? I gave them a chart like this, and I'll say, draw the MACD indicator. Okay? If you can't do that, you don't know how to trade with it. Okay? Okay, do you understand? All right, draw the MACD. Okay? Draw the MACD. Very easy. Amateur stuff. Okay? You see here? First thing we have to do is draw the box. Okay. Oh, I can't see this. Hang on. Hang on. Delete that too. Turn that drawing tool off. Okay, I need some space. Give me some room. Give me some room. I gotta move. All right. Hang on. Let's do it from here. Here's my little oscillator area. And now I'm going to draw a water line. Cool. Now I'm going to draw a MACD. What? Faux shizzle. Okay. Here. 21's above the 55, so we cross right about here. It goes up, it goes up, it goes up, it goes up. Okay. And then about here, it starts to diminish. So that means about here, it starts to come back down. And then about here, it crosses down. So now it's bearish. Okay. And it goes bearish. And then from about here, it kind of fizzles a little bit. And then more bearishness. And then here, sharp upward move almost to the waterline. Then back down. And then about here, it flattens out, right? And diverges back up. And then here, it crosses back over to about here. And then kind of flattens out. Kisses the histogram. And then here it goes bearish, a little flat here. And then bullish, 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 bullish. More bullish, 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 bullish. Flat, 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 flat. Bullish, 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 and then Okay, I just drew the MACD. I can do that all day. Why? It's like reciting the ABCs. Okay, it's like reciting the ABCs. And I say that because I want you to get not just good, like that's simple. You know, I'll just do it this way. You should easily be able to do that. Like it's not even impressive. Standard. Okay. Okay. From what you remember, how accurate is that? I know it's exactly right. So. Now, Jimbo says, your moving averages do the same thing. I know. I can just look at them and see the MACD. So very often I don't waste any space on my charts because I can just look at this chart. I can just look at it and see the MACD. Okay? Okay? See what I mean? Same thing with stochastics. You should just be able to draw stochastics all day, every day. And it's not impressive. You just understand the math. So once again, you can just look at the chart and go, oh, I can see that, right? You can even really see the moving averages. So the best thing, right? This is what I like. You can guess on moving on pivot points and stuff, but why guess, right? I don't need moving averages at all. I should be able to look at this moving average, and I should be able to guess where that 55 is, and therefore I can do the MACD. I can see the price action, so I should be able to do RSI pretty decent, or stochastics pretty easily. Okay? But what I worry about is people say things like, I made that stupid trade because MACD told me to. And I'm like, what? And you're like, yes, MACD made me bullish, or MACD told me the market was going to reverse. And of course, that's mentally deranged. Okay? MACD didn't tell you crap. It's just an algorithm. It just did the math. It's just measuring the distance between the 21 and 55. And are they coming together or widening apart? It doesn't tell you anything else. So you got to be very, 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 very careful. Okay? Especially when you talk to yourself like that, like, oh, MACD told me so. Or MACD only helps with reversals. What are you talking about? And the worst thing ever is you might actually convince yourself you're right. That's 10,000 times worse. Okay? So just understand what the tools are telling you and then use those tools to make decisions. Okay? Did the moving averages tell us that the market was ridiculously overbought? No. That kind of stuff. But notice on the shorter time frame, like the things I tell you that you must have, there's only two things on this chart. Do you guys know what the two things are? These are the two things you must have if you're going to be a profitable trader. I don't care what system you use. I think you have to have these two as a bare minimum, and then go do whatever else you want to do and you'll be fine. What are the two things you must master? And by the way, they're on this chart. Price action and pivot points. Correct. 100% correct, Joey. And no, support and resistance, yeah, but like you can't say support and resistance. I'll tell you why. There is support and resistance. Support and resistance. First of all, that's undefined. Resistance, sorry. Anyways, this is undefined because price action is support and resistance of price. Okay? So to make that evident, I'll say things like, okay, there's some sort of price thing going on here. There's one going on here, right? There's one going on here. There's one going on here. There's another one here. Okay, so on and so forth, right? What am I measuring? That's support and resistance, but only of price, based on nothing but price. Okay? Then we have another thing going on, and I'll do this in purple. Okay? Instead of pink, I'll do purple. Okay? We have, for example, support here, and here, and here, and here. Some of them are very similar, some are not very similar. So what's going on here? It's support and resistance of market. Because what it's doing now, the first one, the pink lines, it's support and resistance of price. Of price. Okay? Because it looks at what was support in the past and says it will be resistance in the future. The other one is support and resistance of the market. What I mean by that is to create a pivot point, you have to look at the previous period. So to get this, delete, to get these pivots here, we had to analyze, I guess I have to do it this way, these candles. And it's just the period before. So to get weekly pivots this week, we had to look at what happened last week. Last week's market. You understand? The week. We're not looking at it by price per se. We're saying what happened last week. What was the market like last week? Oh, it was straight up. Well, based on that information, we need wide pivots. And we need bullish pivots. Okay? And the example of a bullish pivot is here's the old central pivot, and here's the new central pivot. So the pivot went up, okay, a lot. And the predicted, here's last week's predicted top and bottom, and this week's is like, whoa, or the, so they widened and went up. So it looked at what happened during the last period. So yes, support and resistance, but that's like saying you have to know reading and math good, right, to be smart. Yes, but you also, there's some other skills you should have besides that, right? So yes, you need support and resistance, but of price and of market. You notice how this is exactly the same thing that I said in the book, but I use moving averages and oscillators? It's the same thing. You have to understand the market and where price is right now, okay, to help you create trade plans. Okay. So Naveed, very poorly, but I'll even show it. Naveed says this is a bullshit chart. Well, why don't we get you, what do you want to talk about then, man? What would you like me to add? Okay, because that's not a helpful statement. So help me out, Naveed. Why are these not clear? They should be coming in at 1080p. All right, on Perennial. Yeah, give me, why not Renko? Maybe he needs a naked chart. This has only got pivot points on it. That's all it's got. No, guys. I'm asking him a question. You don't have to beat him up. So I'm asking a serious question. I have pivot points on this chart. Now, clearly, I have monthly pivot points and weekly pivot points. Okay? And we can simplify them a little further if you want. Period 1, so that's fine. And 5. I'll do this 2 periods. No, I'll do that 1 period as well. Let's see if this is good. Okay, cool. That's all. All right. Is he gone or what? Naveed, you come in, you curse, you swear, you cut down what other people are doing, and then you leave? That's pretty wimpy, man. It's weak. You around, man? So this is as close to naked. Like, why would you not want a leading indicator? So that's all. So here's the other thing I guess I wanted to say. Both of these things are leading indicators. Pivot points are leading indicators. Price action are leading indicators. Okay, based on what happened in the past, it's projecting into the future. Okay. Yeah, anyways. Somebody said that there's another injection in the repo market. Is that right? Yeah, at some point the Fed might have to worry about this because it's not supposed to happen. So they did 75B yesterday and 75B the day before. Some of you guys said they're doing 83B today. Right? So I'll have to look into that. Which pivot point indicator? I use MetaTraders, and the link to the actual indicator download is in the description below. Hey, my wife said I smoked too much just last night. Oh, it's another 75B, right? That makes more sense, but I was wondering how they came up with 83. Oh, Ali says it's 83B. Interesting, so whatever. So I did a whole discussion on, I think it was Monday. I did a whole discussion. It was either Monday or Tuesday. I did a whole discussion on the repo market, how the repo market basically works, and the issue that has been occurring this week for the Fed to be involved with the repo market. So you might want to watch that. Okay. I think it was Monday or Tuesday. Probably Tuesday. I'd try Tuesday's video. Yeah, I like MetaTrader. What's wrong with MetaTrader? Yeah. What's wrong with MetaTrader? I trade on this chart. Why wouldn't I want to cover it? But simple enough. You know, if there's something better, that's cool. But, you know, it's funny. Like, I'm not really interested in anything better. It's kind of a weird, right? Is that right, Ali? That makes sense. But the repo market is, I think it's just domestic, isn't it? Oh, okay, yeah, Jolly. Yeah, that's just it. That's all. Yeah, I know it has a lot to do with taxes and stuff, but why are, you know, the big question is whether the market's actually frozen, um, or if there's just a glitch in the matrix, right? So if there's a glitch, you know, the architect has to reboot. How many iterations of the matrix were there? Is there 7 iterations where the architect had to reboot the matrix? Now we're getting esoteric. All right, well, I guess I got to go, guys. I have to run the swing trading group. It is exactly like 2008? No, it's not exactly like 2008. Now, 2008 did have repo market issues, but it's not exactly the same. Not even close. But the worry is it becomes the same. Yeah. So if you're in my swing trading group, we meet at 11 o'clock today, and we're going to set up trades worth 100 to 300 pips, usually 2, 3, 4, 5 days in advance. We've had a good month and a good week, so hopefully, so we're actually planning next week. We're doing that today. If you'd like to join our swing trading group, it's swing.fxbootcamp.com. You put in a credit card, you pay money, you join the group. You get the training, and you get the live group. Okay? You don't have any money? I do a free webinar every day to help you. Jorge says, I use stochastics in 5 minutes with price action confirmation. Yeah, but that's just an entry. Yeah, that's just an entry. Remember, Jorge, if you don't have the strategy, your tactics are not going to be consistent in the long run. Okay? So try to conform, even if you're going to practice for a year, try to conform it with a strategy, with your bias, okay? Okay, don't just do 5-minute confirmations and stuff. Make sure you got a strategy behind it. Okay, and by strategy I mean bias. All right, so peace on earth. May the pips be with you. May your profits be above average. I'll see you tomorrow. Hopefully YouTube has less problems. It's not me, it's not you, it's them.